New week started, and we are wondering what will happen on financial markets, looking at the currencies, the indices, and we are wondering where there will be some possibilities. There is why my and your guest is David Jones, Chief Market Strategist, Capital.com. Hello, David.
Hi, hello.
David, gold has slowed down its growth, while one of the strongest growing today is the Japanese Nikkei. Does that mean we are now dealing with a risk-on scenario?
I think when it comes to stock markets, it's right to call it risk-on, and we've had risk-on for quite a few weeks now. You know, if you look at the Japanese market, is an interesting one because I think just today the Japanese government effectively sort of lifted the state of emergency due to the coronavirus, and the last of the restrictions got lifted as well. So Japan looks like it's turning to normal from a day-to-day life point of view. What that means for the economy, we'll all have to go and wait and see. So I think that's definitely helped give a lift to the Nikkei. But if we go back to the lows for the Nikkei in the really the middle of the crisis, the stock market has rallied by about 25% over the last couple of months already. But today in overnight trading, even though many markets are closed on Monday because of the bank holiday around the world, even US markets, the S&P is up about 1% in overnight trading. So stock markets are still, I think, very much risk on, continuing this recovery over the last few weeks. Gold has come off, like you've mentioned, but it was only this time last week that gold made a 7-year plus high. It moved to its best levels since October 2012. So it has dropped over recent days, I think maybe due to the strength of the US dollar, and we'll talk about that more, I think, in a few minutes. But I think gold is still positive, so it wouldn't surprise me if over the next few weeks we see something of a gold recovery. So for me, that's still positive, and stock markets at the moment still continuing their recoveries too.
Looking at the indices, we can also say about the British FTSE index, which is nearing resistance at the end of April. Do you see the potential to break it?
The UK FTSE is always something of a strange market. That resistance level you rightly mentioned is at 6,200, 6,150, 6,200. But the FTSE is always a strange one when you compare it to other indices around the world, like perhaps the Nikkei and the Dow Jones or the S&P in the US. Because so many FTSE 100 companies make their earnings overseas, so not in pounds. So we have a strange scenario where if we have a weaker pound, it does lift the FTSE 100 index. It tends to move the opposite way. Plus, of course, I think so much of the FTSE is weighted towards major oil companies like BP and Shell, as two examples, and also some of the major banks, the likes of HSBC and Barclays, these sort of banks. So it tends to be not the broadest of stock market indices. But I think if we see markets such as the S&P 500, such as the Nikkei, the DAX in Germany, if we see them continue to recover, you'd have to expect the FTSE to recover as well. I think, it's up a lot from the lows in March, but it has lagged behind some of these other indices because it's not at such a broad-based index. So still strong like other stock markets, but I do wonder, given how far stock markets have bounced back, are we going to see at least some caution return in the weeks ahead? At the start of this week, we don't have it. Like you said, the Nikkei's up. Like I said, the S&P is up in the out-of-hours market. So stock markets are still bullish. But I think perhaps we need to be aware of some caution starting to come in, and maybe that's one thing that will stop the FTSE from breaking that earlier resistance level.
Last week we talked about WTI crude oil, which is currently slowing down growth a little, but the upward trading is continuing. The last reading indicated a 5 million barrel decline in inventories. Do you think that this fact and OPEC's recent announcement of cutting production will support the growth of this asset?
Oil is a fascinating market at the moment. We had the May contract go negative, didn't we, in April for the first time in history, making headlines around the world. Oil was minus $37 a barrel. But since then, if we look at the cash market, as you say, it's been a great recovery. That the cash price for a barrel of oil has gone from $10 a barrel in April to about $33, I think, at the time of recording. The inventories last week, that was a surprise, 5 million negative number versus a surplus expected. So we are seeing those cuts. Nearly 10 million barrels per day have been cut from production since the beginning of May. They are having an impact. And demand, clearly, I think as economies come out of lockdown, you'd expect demand to tick up. But the price has trebled in a matter of weeks. And I just wonder, a bit like stock markets, if I was trading it today, I'd be looking for buying opportunities for the short term. But I just wonder, when it's come so far so quickly, are we due something of a pause and a bit of caution? I think for oil, we haven't quite reached $35 a barrel in the cash market. $40 looks like an obvious resistance barrier. So, given it's moved higher by $20 in the last few weeks, I think we just need to be aware that it's unlikely to move $20 again in the next few weeks. So again, I would just be a little bit cautious about oil up here. We saw it get knocked heavily, I think, on Thursday night, Friday morning, due to some tension between the US and China over trade. We did see it and what was going on in Hong Kong, but then it has bounced back quite sharply for that. So I think short term, there's still buyers out there. I just worry about how much real upside is left from here, given we've come so far so quickly. So I think maybe a period of caution is ahead.
In the context of oil, it is worth focusing on the Canadian dollar, which is strongly positively correlated with it. The US dollar to Canadian dollar, the famous loonie, has attacked support for 1.3860 several times, so far unsuccessfully. Can tomorrow's testimony of the head of Bank of Canada before the Senate Committee of National Finance and Friday's reading of Canada's GDP can break the support?
I think the GDP is the important number. I think foreign exchange markets, for those of your viewers who look at currencies, been a very strange time the last few weeks. And like you say, oil is such a major part of the Canadian economy that a recovery and a return back to somewhere approaching normality would help it. Those GDP numbers will be interesting, but I think much of it is so much dollar driven over the last few weeks. We've seen, you mentioned that support level getting hit again. We've seen this real sideways range for the US dollar, and we've seen it in other, and the Canadian dollar, and we've seen it in other currency markets as well. And we did see a slight rally in the US dollar end of last week, which put a bit of pressure on the Canadian dollar. So I think, yes, that GDP will have an effect, but I think it's probably more to do with what the US dollar is going to do. Clearly we've seen the Fed, the central bank in the US, come out and say that they will do whatever it takes, in effect, to support the US economy. So I think perhaps the dollar index is one of the things to watch here, but those GDP figures on Friday, I think, will be really interesting for the Canadian economy to see how it's fared.
The dollar index has been in consolidation for the last 2 months. Preliminary GDP is on Thursday. Do you think the reading might surprise us in favor of the dollar? What is your scenario looking at the euro dollar, your scenario per this week?
I think it's interesting, like you say. I think it does feel like it needs a catalyst to break the US dollar index out of this sideways trading range, and perhaps a surprise either way from that number is going to be the thing that's going to do it, because it has just been trading in a really tight, almost coil-like trading pattern. The euro dollar is interesting. Euro last week did have quite a strong move against the US dollar, but towards the end of the week, those gains were eroded as we saw the dollar come back again. But I think euro dollar, there does still appear to be an appetite to be a buyer of the euro on weakness. So at the moment, I think at the time of recording, it has dipped below 109 earlier this morning against the US dollar. Perhaps we'll see a gradual recovery in the euro this week, with the dollar coming under more pressure. But they've been quite boring markets, I'd say, over the last few weeks, and it feels like it needs something, some sort of catalyst, some news event to try and break this tight range the US dollar index is in. But I think we could see the euro creep a bit higher as the week goes on.
David, thank you very much for this interview. Thank you for your analysis. My guest and yours was, my guest and yours was David Jones.
Thanks very much.